Now, while Fed officials signal interest rates are at their peak, Bank of America says appetite for longer-dated U.S. bonds has shot up. Let's discuss this with Bloomberg's Kattherine Doherty, because, of course, we know Bank of America knows something or two about buying treasuries.
That is true. Yes, good point. But no, this is their clients that they're asking, basically the sentiment that they're trying to get across the street. And what they're finding is that this bar for further rate hikes, it's set very, very high. So I don't think that there's as much of an expectation for rate hikes. So what does that mean? It means that everyone is then expecting that if there's no further rate hikes, it's triggering this dip in buying. But what's also interesting is that even though the survey is showing that their clients are feeling this way, this is the sentiment, the positioning does not yet reflect these results. So I thought that was a kind of interesting comparison here that the bank is pointing out. They're saying that the gap between the sentiment gauge and the actual long U.S. duration exposure, it's yawned to its widest ever.
You know, what's interesting about this, Cato, is that, and I think that might be the first time I use your nickname on television. Very sorry about that. But, you know, you cover Bank of America very closely, and this is one of the banks that has been benefiting from the great underwriting boom as well. And I'm wondering if some of this is just signaling the great investor search for yield, longer dated U.S. bonds, corporate bonds, like they're coming out of the sky. What do you think?
Absolutely. So if rates do stay higher, you're going to see, think about it from the consumer standpoint. If you have a CD that's rolling off, you might buy another one because those rates are still going to give you a certain amount of yield that if you want to have something that you know reflects in the next 13 months, you're going to get a return and not have as much risk, you might choose to roll over into a new CD. And I don't know if a year ago that the street would have expected we would be here today with rates where they are.
And it's interesting, you see those banks still coming out with some of those promotional offers on those CDs.